Hi everyone, Ian here. I just wanted to give you a brief roundup of what trades and what our trading has been like over this last week or so. We know that we're in very volatile times because of this terrible, unfortunate Russian-Ukraine crisis, war, whatever you wish to call it. Something that has really upset the world, dare we say it. But trading and the trading opportunities have been outstanding, and I just want to show you how our methodology and how my software trading tool has worked, and something that if any of you have been struggling there, perhaps you can take a look at this and learn from it. So again, I'm going to start in the pound dollar. What a great trade, folk. We showed weakness towards the end of the previous week. And then last week, this is the 4-hour chart here. You can see that our price bars now have turned red from going a little bit sideways here between green and blue, but started to show weakness. And although they started to turn red here, I wasn't that interested. I want to see where the next bout of buying pressure would take this market, and then determine then, was it going to be stronger than previously, or was it going to be weaker? Obviously with the red bars coming in and remaining, it indicated weakness. The market then made a high 134.38, and there was an opportunity in here, something that I already had put up in my daily room within the Forex Vox chat room. But then just last week, look, we're into March here, we come back up, and quite significantly here, folk, it made a 1 pip or 100th of a pip lower high. It went to 134.38 the previous week. Last week it went to 134.37 and came down, and it went lower than this low, and it came back up again and went lower than this high, and it made lows at 132.02. So just by using our methodology first and foremost, and secondly the color of our price bars based on our software, we were able to take advantage on a 4-hour chart. Of course, some of you might say, well, I do not want to be swing trading this over a longer period of time, and I want to intraday trade it, and the opportunities between intraday trading it. Look at the 15-minute chart. Look at Thursday, when we come up and made a double top, red bars, the market fell. You come out of that market, okay? So you're going to get 40, 50 pips in that move. Come out of it. Wait then until Friday, 4th or the 3rd. This is overnight trading. I wasn't up, everyone. But you come into 8 a.m. in the morning and you've got red bars. We were waiting on a retracement. And then we go. And where did the market go? From 133 down to 132. Another 100 pip move just on the 15-minute chart. So the opportunities are there. The opportunities are there. Let's take a look at another market. Coupled with that, folks, just the very basics of price action, by the way. If you take a look at our weekly chart, last week it was a bearish weekly bar. And of course this week it's continued. So you can see from this we've got a number of bottoms along the lows here, and that there would be our target to probably beat those, because beat those lows, take them out to the downside. This is the kind of information, knowledge that you need to consistently succeed. Go to another market. We'll go to euro dollar. The exact same thing, folk. Weakness. Look at the 4-hour chart again. I put this up. 113.95 resistance on the 4-hour time frame. Market goes up. That there is a lower low than any low over to the left of the chart, and the market comes down. Lower high. This is a lower high than this high, and then the market falls. And each time the market goes down and retraces, it continually makes lower, what we call vertical bar trading pattern highs based on our rule set. But again, for those of you that say, oh no, I want to be trading on an intraday basis, then that is also covered, because the 15-minute chart, look at the sell signal that we got on Friday. Sell was at 110.05, folk, right? Look at the times in the morning, and that market went on down, and we got a sell at 110.05, and it made lows of 108.86, over a 100-point or pip move from our entry. Ample opportunity to lock in quite a lot of profits. Fantastic trade, all there to be seen. Red bars, but more importantly, The red bars are only confirming our price action trading signal. Okay, now let me just pause there and let's go and look at another couple of markets. In fact, let's look at one more here, one of the Forex markets, another one. This is the dollar yen. Look at this intraday signal. Again, 15-minute chart, red bars, lower highs. The red bars come in. Yes, there'd been weakness. A little bit of strength was coming into this market, but there was no higher lows here, folk, with blue bars. But there was lower highs with the red bars, and bang, we got a sell signal at 115.34, and the market was 60 pips or over 60 pips lower. So that's another market. Now let me pause. Let me show you what it would be like to trade it on the likes of the commodity market. What about crude oil? Here we have crude oil, like crude oil, a market very close to my heart, a market that I trade a lot. And this again is on the MT4 Forex Fox platform. Very tight spreads, folk. Great platform to work with. You can either have the Seychelles account if you want higher leverage, or the FCA London account to be regulated, and your funds to be totally segregated, as well as any other FCA broker. But the only problem being that your leverage is not as good. But you can amalgamate both, so you can with Forex Fox. You can have both accounts, an FCA regulated London account and a Seychelles account, and you can trade intraday. Flick your trades over to Seychelles for higher leverage, and any funds back in the evening time into your FCA regulated account. I find it very, very, very good and a great platform. This again is like crude oil. Look what we got. This is the 4th of March. Look at the times down here. Quite a weakness here, folks. Come back up. We were looking for a lower high with red bars. We got one in here, and we only got a 70-point move. You may say 70 points. Well, 70 points is enough not to lose any money, but no real follow through. But the moves that like crude oil have been making over the past 3 or 4 trading days have been immense. I used to think 100 or 200 point moves was a great a move, and now we are having 8 and 9 and 1,000 point moves. But anyway, we come up. We got a brief sell signal here that wouldn't have lost money. It would have been very careless for anybody to lose money here. And then we come back up again, and then we get higher, what we call a higher low, higher vertical bar trading pattern low. What is it? It is what we call a smart spot, because it is retraced into an uptrend now, and the price bars are now indicating strength because they've turned blue. We get a higher low, and the market goes up. The market then retraces, so we've got a double whammy. On the first move, we get over a 400-point opportunity. And then later in the day, in the afternoon, and take 2 hours off this for UK time, by the way, 2:30, the market retraces. And then at about 4 p.m. on Friday afternoon, the market makes another move and goes from about 113,360 and close at 116,3, another 300-point move. What an opportunity. Based on our methodology, number one. Higher lows, that's a higher low, that's a higher low than this low, that's a higher low than this low, and blue bars, confirming that. What about the DAX, you might say? What's it like to trade the indices? We know what a weekday, Friday again, go down to the date, 4th of March. Look what happened, we're already in red bar mode, market retraces. Remember, we're not wanting to do intraday trades here, we're at a 15-minute chart. Okay, we want to keep our risk small. We made a lower high. Confirmed lower high. Market goes down, retraces, goes back up, makes a double top, didn't break those highs, goes back down again. What did the market do? It made on that intraday signal, and the DAX was reasonably quiet on Friday. We still had a 200-point move on a 15-minute chart. All simply guided, all knowing what our initial risk was from the outset, because if we take a sell signal in round here, we know that the risk is from here to up to the high here. So this is all based on our rules. Those of you that are really, really, really adventurous and want to trade Bitcoin, you may say, Ian, how does your methodology work on Bitcoin? It's a market. Now, personally, I do not trade, folk. I can tell you, spreads are quite wide. Of course, the opportunities are immense for those of you that do. Look at a 15-minute Bitcoin chart, again on Friday. Look where a sell signal was. First red bar after making a confirmed lower vertical bar trading pattern high after coming out of sideways action. Green bars indicating sideways, nobody in control, goes red again. get a sell signal at about 41,260 and the market goes to 39,000, a 3,000 point move in Bitcoin, again on our 15-minute chart. Red bars. We know exactly what our risk was from our entry point up to here. Why? Why is it from there to there? Because if we're taking this sell signal, we're taking it because the buyers that come into this market from here to here are not as strong as what they were up here, because this has made a lower high. So it makes a lower high. We're wanting it and requiring it based on our methodology to make lower lows. And of course, the red bars confirm that it is more selling. It has more selling strength than it has buying strength. And therefore, on that basis, if that market does not do what it should do and continue to make lower highs and starts making a higher confirmed, breaks up through this here, so instead of a lower high, it makes a higher high, we do now no longer want to be on any short trade. We want to be out of this market. That is why our stop and our risk is from our entry point to up here. That is what it is. In every trade we take, the same as a buy signal. If this was a higher low with blue bars, our risk, and we got an entry in around here, say one of these bars turned blue, our risk would be from our entry to down here. Because if that market is going to be in an uptrend, it's going to make higher lows. And once it starts making lower lows, we no longer want to be in buy signals, folks, or buy trades. Okay, I hope you've enjoyed this. It lets you know the strength of our methodology, no matter the market conditions. The most volatile markets we've had over this last 7 days, trading days over the last 5, 6, 7, 2 weeks. In fact, I'll be quite honest, from the beginning of this year, it's been pretty volatile, because obviously with the inflationary pressures prior to this Russia-Ukraine war, and the interest rates going up and household bills going up, etc., that created nervousness within the markets, and that was creating volatility in its own right. And then, of course, then to really put the tin hat on it, we get this terrible situation between Russia and Ukraine at this minute in time. So thank you for watching. I hope you've enjoyed. Remember, it's beawinningtrader.com. I am having another webinar in the coming week. And I have something quite interesting to actually offer at the end of the webinar. So those of you that want to take your trading forward, please do attend the webinar. You will not be disappointed. Thank you in the meantime, and good luck with your trading for the week ahead.